In this presentation, we will take a look at employer payroll taxes within QuickBooks. For more accounting information and accounting courses, visit our website at accountinginstruction.info. Here we are on the home page. We currently have the open windows open. In order to open the open windows, we go to the view drop-down and select the open windows list. We're going to take a look at the lists, the payroll items list, by going to the lists drop-down and going down to the payroll item list. The employer taxes, like all taxes within the payroll settings, will be set up within the list, the payroll items lists. And we will set them up generally by going through the interview process, by going to the employees drop down and setting up the payroll. And this will be done whether we have the manual version or the paid version. It's important to note as we go through this list which of the taxes are going to be the employee responsibility and which the employer. And when we open them up and look through them, we'll get an idea of why they're being set up the way they are because of that, and what's going to happen with them when we process payroll with regard to the payroll reporting and our normal financial statement reporting. We know that there's going to be two taxes that have an employee and employer portion, or the FUTA taxes are usually the ones that come to mind first. Those are going to be the major payroll taxes other than the federal income taxes that'll have an employee and employer portion. The way QuickBooks deals with that is having two payroll items, one for the employee, one for the employer. So you'll note here for Medicare, for example, we have the employee and employer version. The Medicare for the company is going to be the one that's going to be driven and going to the employer taxes. We have a similar setup for the Social Security, which is the other FICA tax, where we have the employee, the company, and the employee. So we have the employee and the employer or company. So the employer side is the one that's going to be used. Now these are confusing because they have the same rate for the employee and employer portion, which makes it easy for us to think that they're kind of the same thing or get them mixed up. But just note that they are being driven by two different items within the payroll settings. The other big employer tax that will be broken out separately is the federal unemployment. Now I say it's a big tax because it's going to be one of the federal taxes, but it's not big in typically dollar amount. The percentage is fairly small for the federal tax if we have the state tax set up in some way, the state unemployment. Note though that this will be an employer tax. If we double click on this one, we say that it's the federal unemployment. It's going to go to the payroll liabilities and payroll tax expense. We've actually made this go to a payroll tax expense account rather than the payroll expense account. And we'll show how to set that up. And then we've got the rate here and the tax set up there. So we actually are breaking this out to another account. When we process it within our payroll system, it'll show a different financial account. And we actually made a slight adjustment to show that, but that's a nice adjustment to have. And then we've got the California unemployment, which is the other one that we typically will talk about even when we're only talking about the federal taxes, because the federal and the state for federal unemployment and state unemployment are more linked together, and therefore to really discuss the federal tax, we got to at least mention that the state tax has to be there. So let's take a look at this in terms of a payroll. So we're going to go up top to the banking, take a look at some payroll checks. We're going to go to the use register, and we're going to go to the checking account. That's the one. We'll go all the way up top first, and we'll pick Anthony Moore, the first paycheck. Going into that item and taking a look at the paycheck. This is the detail. Now note that the employer stuff is really the stuff on this side. This side is stuff that's being paid over and above for QuickBooks. So anything that's on this side is being taken out of the paycheck. So it's really being paid by the employee, in that we're not paying anything over and above what we've agreed to pay the employee if it's on this side. We agreed to pay the employee this amount, and this is just stuff that we're going to take from them and pay to someone else for them. The stuff over here is really the employer side stuff, the stuff that we're paying over and above what we agreed to pay the employee in terms of gross pay. And that's going to include the employer portion of Social Security, the employer Medicare, the federal unemployment, and the state unemployment. Now note that these two are going to be there most of the time, all the way through the year, so we have a good idea of them. They'll start to feel natural if you start to process payroll. We'll have two sides, the employer and the employee. The employee will never see these two sides, so if you're only looking at your paycheck stub, you'll never see this side. But if you're processing payroll, it'll be there all year. You'll have to pay another, you'll be very aware of it if you're paying it out of the system. These two sides, however, will only be there in the first quarter because they have that cap of 7,000. So just be aware of that. If we close this back out, for example, and close this back out, note that if we went back down here to another paycheck later on in the year, say on 8/1, double click on Anthony's paycheck there. These are all paychecks, by the way. So if we go into this paycheck, then we'll note that the Social Security and Medicare are still there. The amounts may change. We'll talk about that as we work the problem. But the federal unemployment and state unemployment are gone. So those are two employer taxes that often just get confused. One, because the dollar amount is small, and two, because they hit the cap early on in the year. And that can make people not fully understand them very well. So if we close this back out and close this back out, also note if we go to Judy Jones, our new employee that we started on 12/1, and look at her paycheck. This is the first paycheck at the end of the year for Judy. Just be aware that this employer tax, as we look at the paycheck stub, will be back in play for Judy. So we'll see that this, even though she's a high earner, we have the federal unemployment and state unemployment at the end of the year because it's her first paycheck and she hasn't hit the cap yet, and therefore she's got to hit the cap before it'll go away for her as well. So those are going to be the main federal tax or where it will be within QuickBooks and how it will be calculated for the employer taxes. For more accounting information and accounting courses, visit our website at accountinginstruction.info.